I don't think a lot of people know this, but across Southeast Asia, SMEs form the backbone of economic growth. It's super interesting to me, actually. Yet, a lot of these SMEs can still struggle to secure financing, manage payments efficiently, and scale across borders, right, if they want to go into other countries. They just don't find it easy to do. Fintech innovation, however, has promised to change that equation. From alternative lending models to next-gen payment infrastructures, technology is rewriting how SMEs access capital, transact, and compete. This episode of ATP wants to understand a bunch of things. How is the SME landscape in Thailand and Southeast Asia evolving? Do traditional financing models leave SMEs underserved? And can digital platforms change this? Can innovative payment infrastructure accelerate cross-border growth? Joining us today are Liao, Nicholas, we'll call him from now on, CEO of Wallet, and Vikas Jain, the country head for Thailand at Funding Societies, to discuss all of this and more. Gentlemen, how are you two doing today? Thanks for coming.
Oh, thank you. Thank you for having me. Well, it has been following ATP for quite some time. It's a pleasure to be here.
Thank you.
Yeah,
Okay.
likewise. Like it's great to meet you, you and Nicholas, and thanks for the invite.
It is my pleasure. Okay, let's start with a big question here, just a big general question. How can fintech innovation transform SMEs into regional and potentially even global players?
Well, my opinion so is that it's the core challenge and opportunity for our time. Well, fintech is a great enabler, but the magic isn't just moving money. It's about building bridges. Okay, a bridge that allows MCs in Vietnam to sell a customer, say in Thailand, as easily as to a customer in Hanoi. Okay. And the thinking global part is about ambition and vision, but the acting local part is where the payment infrastructure we build comes in. Okay, it's the foundation, a concrete foundation that makes the global ambition not just a dream, but a viable daily business operation.
Yeah, I think for us specifically, if you look at our business, which is lending, and we are present across 5 markets right now in Southeast Asia. I think the advantage for an SME who want to expand, cross border, for example, or who want to do business cross border, is typically going to be around financing in a new market, because in a new market they haven't developed a track record, they haven't had a presence, and typically the traditional lenders will just look at them and say, "Hey, sorry, you have no track record in this market. I cannot lend to you." But for us, being in multi markets and being an online platform, having looked through the online transactions and payment data that they have, based on that, we can typically underwrite them even in a new market, even though they do not have any track record there. So that typically helps in terms of what we can do through technology as well as geographical presence.
Okay, I want to go back to Nicholas in a second, but just quickly, we're in Thailand. At least you and I are both in Thailand, right? And I know Nicholas travels the whole region. But how do you see, because I have an opinion on this, right? How do you see the SME landscape evolving in Thailand and then the broader Southeast Asian region? And I'll come to you after in a second, Nicholas, because I think this is actually really important.
Yeah, I think if you look at last few years, it's probably the toughest time for SMEs, starting with the pandemic, when the global supply chains got impacted, then the wars, the recession, tariffs more recently. I don't think SMEs have faced so much in 5 years ever before, in the last 100 years or so, right? So very very tough. So a lot of SMEs had to shut down. The ones who survived were the ones who were able to pivot, the ones who were able to adapt, the ones who were able to adopt technology, do things more online, be more efficient in the way they were doing things, and to be more digital overall. Specific to Southeast Asia, if you would see, the multiple economies went through a recessionary phase, or COVID got impacted at different points in time. And across Southeast Asia, you see the same issue. Specific to Thailand, I would say there are multiple other issues, right? The household debt itself is so high. The economy has had a fair bit of political influence, which has impacted it. The governments have been changing, and there's been a fair bit of instability, which impacts policy making, which impacts government projects which were not issued for a long time, especially last year, and all this has had an impact on the SMEs as such. Recently, and in the last couple of years, the financing has also slowed down. So banks are quite reluctant to fund SMEs, especially the smaller ones. And obviously, without financing, they cannot grow. So it's been quite a challenging last few years for them.
So, Nicholas, what has been your experience? How do you see the landscape here? And I guess the follow-on to me is, do you see a generational change taking place, particularly in the adoption of technology, but also in just the running of the business itself? Does that make sense?
Well, yeah, I mean, because 95% of our customer base are from China.
From China, okay.
Okay, they are selling, and then selling it to Southeast Asia and to US and Europe. Okay, so the SMEs in China are changing. Okay, and the topic work is, in fact, just a couple of days ago, they imposed another 100% of tax on all the Chinese goods importing. Okay, to US.
Right.
Okay, so basically they have been a tremendous shift that the Chinese merchants that are now shifted away from mainland China and probably set up a supply chain in the rest of the APAC region. For example, in Vietnam, in Thailand, Malaysia, right? So the way they conduct business changes, okay, and in the sense of payments and the fund flow changes. Okay, so I'm gonna say, SMEs are really the backbone of Asia's economy. Okay, they represent over 90% of all enterprise and employ most of the workforce. Okay, but in a sense that what is changing now is that SMEs are not only just local players. Technology, like you mentioned, the digital payments, the platforms like Shopee, Lazada, and Amazon has opened the door for them to trade globally from day one. Okay, so at Wallet, what we see more SMEs in Vietnam, Thailand, Malaysia selling directly to customers in US or Europe. Well, yet they still struggle, not only the payment, but the taxation, all the regulations, compliance issues. Okay, so that's basically what I found out for the last couple of years.
Can I ask you this? Because you mentioned China, and you mentioned that a lot of your business you do in China as well, right? But that because of the new taxes or the new tariffs, that it's been harder for them to sell in the U.S. Makes perfect sense to me. How, at least in your experience, right? And I can ask you the same thing, Vikas, in a moment. But I'm curious, how easy is it for them, in your experience, to pivot, using a word that Vikas just used, to not just selling from China into the U.S., but into other locations like Southeast Asia? Is it super hard for them to do? And
well, yeah, I mean, U.S. is a one big market, a unified market, okay, and Europe, same thing, okay. But Southeast Asia, it's a very fragmented market, okay. Selling to those markets will require extensive local knowledge, okay. And not only payment, but also logistics, local compliance, tax issues. So it's really hard. So what our mission is try to make the border invisible. So basically, they can think of their sales strategy, business strategy globally from day one and scalable, but the local thing, okay, for those issues that just hand over to wallet, okay. So we're gonna make their life much easier when they try to enter new market, especially a fragmented market like Southeast Asia.
Yeah. Are they cognitive of the fact about how fragmented Southeast Asia is? Do you know what I mean? Because you're right. Selling in Tennessee is not much different than selling in Illinois, but selling in Thailand is very different than selling in Indonesia, yeah?
Yeah, especially for payment methods. So what we do is that, okay, like you said, each country might have their preferred payment methods, like PromptPay in Thailand, QRS in Indonesia, and GCash in the Philippines. So how you can build this trust, okay, so they can build a product, the best of the world, okay, but if their payment method is so foreign, okay, so immediately you lose this kind of sense of trust between your customer and the sellers themselves, okay, so you have to adopt to your customer instead of asking your customer to adopt to you. So, we build this immediate trust by, create these unified MPIs, and in one single dashboard you can offer hundreds of payment methods to let your customer feel that you know them, okay, not just as a payment tool, but culturally you represent yourself to be local presence.
So, Vikas, I want to ask you this as well. And I was thinking about this yesterday. I think this will make both of you laugh. I opened up a bank account yesterday, and I've been using one particular bank and that bank's app for years now. And I was super comfortable with it. I could manage my time around it. Simple. And I'm an early adopter of all technology, right? So tech does not scare me. But as I was opening up my new bank account yesterday, they said, okay, download the new app. And I had to do some pretty specific things yesterday with some of the money movements that I was making. And I was actually a little stressed out about, am I going to be able to figure out how to use this new technology, even though it's not so different from the old one that I was using? And I'm curious, Vikas, in your experience, right? Because you said this, that digital platforms are making it easier. But what do you see, particularly from an SMEs who've been through all these issues, as you were talking about earlier? How hard is it for them to adopt these new technologies, even if they're just staying in their own country, but then on top of that, if they are moving or expanding into other countries?
Yeah, I think we have to think about, what SME does on a day-to-day basis, right? They're too involved in their own business. They are actually sometimes struggling, sometimes trying to grow. And then when you ask them to learn new skills or new technology, it's not easy for them. It's not easy for them. And that's why platforms have a responsibility to educate them, to engage them, and move them from an offline to an online viewpoint. Because they're very comfortable doing what they're doing, but they also are eager to grow, and they are very eager to survive, right? And they're willing to put in that effort if somebody can help them. If you leave it on their own, they won't be able to do it. So that's where I think platforms like us come in, and to help them move from offline to online. The other nuance that they face, and I think a lot of things what Nicholas mentioned were very, very relevant, uh, is especially for Southeast Asia, is the language barriers. In many of the countries, English is not the primary language, especially if you look at SMEs. At corporate level, I think it's all good. But the SME level, many of them are not comfortable with English, sometimes not even reading, forget speaking, right? And when then they have to expand to another market, it's extremely challenging for them because SMEs on both sides cannot communicate, right? And that creates a big barrier. And the last one I think would be cultural differences. So how an SME in Vietnam or Indonesia would behave would be quite different from how they would behave in Thailand, for example, right? And that also makes it a bit more difficult and challenging for them to go cross border and being able to operate, even if they were very successful in their own market, to be a success in another market is quite challenging as well.
Yeah. Do you want to address this generational change that I was talking? Are you seeing this? And Nicholas, I'll come to you in a second with this. But are you seeing this generational change where, maybe grandma and grandpa started the company, dad and some of the uncles and aunts ran the company, and now the new generation is coming in to run it, and they're like, I can't even use my iPhone to get anything done here, kind of thing. Are you seeing this generational change, and is that accelerating the adoption of new technology?
Yeah, definitely. So we have some second generation, third generation entrepreneurs who want to make a difference, who want to change things, change the way things were done. Uh, not easy for them because at times, their parents themselves are saying, "Hey, we have run this business very successfully.
Right. For 30
don't change
years, what
things
are you
around."
doing? Yeah.
Yeah. But they are quite keen, and I think they are moving towards the right direction in terms of more digital adoption. We do have quite a few of them actually approaching us for loans, so they can be more digital. They can adopt technology. They can buy the kind of hardware and software that they need to improve their business and to be able to be more competitive. I think in today's world, if you're not moving online, if you're not going to use AI, you're not going to use automation to improve efficiencies, I think it's very difficult for you to compete. And I think next 5 years are going to be quite path-breaking, especially in terms of the AI adoption, right? The SMEs who will have the first mover advantage will, I think, benefit a lot from this.
SMEs that are moving from the traditional cash-heavy business to a fully digital are understandably very cautious. Okay, so basically, it's about how you educate them. So that's why we spend a huge amount of time creating contents, hosting webinars, and having one-on-one conversations to, demystify cross-border payments. Okay, so we invest heavily by expanding how their money moves. Okay, and how FX is calculated, and how compliance can protect them. Okay, not just the system. So we're not just selling a service, we are empowering them with the knowledge. So when SMEs owners understand how it works and feels in control, and that's when I can come back to this: is trust is fully, solidified. Okay, so give the SMEs that control. Okay, so when they trust, they will adopt. Okay, so if the trust is not mutual, then there's nothing we can do, and I don't think they will move forward.
So I want to ask both of you this, and I want to start with you, Nicholas, because both of you mentioned like laws and regulations and compliance. One of the things that I've found actually, so I lived in Japan for 20 something years. All of their laws, all of their regs, they're all in Japanese. And I think foreign companies still find it today very hard to operate, partially because they're like, what are these laws? But in Singapore, right, conversely, it's all English law. And I don't mean only in the English language, it's English law that they're very comfortable operating in. How do you help your clients in places like Thailand, where it's just Thai law, Malaysia, Malaysian law, Indonesia, Indonesian law, Vietnam, the same thing, and even in the Philippines, the same thing? You both mentioned like making that easier for them. How does that work?
Typically, we don't see, regulations, okay, or in the sense of banking compliance, it's optical, okay. In a sense, they're more feeling like essential partners. So it's about, early adoption, transparent, okay. So each market has its nuances, okay. So for example, like Thailand focus on domestic QR, and UK, while Singapore might focus on safeguarding AML, and Vietnam is starting on their cross-border settlement rules. So when it comes to regulations, okay, even, especially when, Weekend and you mentioned there was language barriers, the early adoption, proactive engagement to the regulations to show them that the payment industry, payment platforms is not only on the innovative side, but also we are fully compliant from day one, and show that to your customers so they will understand that we are here to protect them, like I mentioned before, not just the system try to keep them out of the the borders. Okay, and that sense will give them a confidence. Okay, so when they think about globally, okay, so they would know that this is someone like Wallet, like Funding Society, to help them not only to collecting monies, okay, from the customers, but also help them to be fully compliant and get financing, especially when they want to grow.
See, being a fintech platform, right? So, and having expertise on the lending side is what we have. We are not expert in their businesses. I think the SMEs know their business better than we do, right? But so, and the local compliance and tax laws might be very different for each industry and each segment of customers, right? So where we come in is when we assess them, let's say for a financing, right? We try to see if they are actually being compliant with all that they are supposed to be compliant on, right? And typically, we encourage them to be as compliant as possible, so that it's easier for them to get financing. So it's kind of a carrot and stick approach, but yeah, it works because sometimes they don't think it's important enough, even if they know that there is a typical legal requirement or compliance requirement that they need to satisfy. Other than that, we work closely with the associations, SME associations. We work closely with accounting and tax firms to and hold joint seminars, hold workshops to educate them, wherein these are the experts who come in from their area and their domain, while we come in from a financing perspective.
Got it. Can I ask you this? So you're both building new platforms, right? And I'm curious, Vikas, on your side, like why do traditional financing models fail SMEs, and why do new businesses like funding societies come in? How are they doing things better? Do you know what I mean? Because there are plenty of banks and smaller banks and stuff that could lend to them, but somehow you guys are growing really fast. And how are these other traditional sort of funding sources failing them?
Sure, I think it's a factor of a few things, right? One is the structure. Uh, Typically, the traditional financial institutions structurally are more attuned to funding more stable SMEs, for example, or the SMEs who are already doing quite well, right? So what they look at is your past track record in terms of financials. They look at your past repayment track record, uh, your size of business, and so on. Because then they are more comfortable lending them for the longer term. They cannot do short-term lending because the cost doesn't make sense for them, right? Cost versus revenue, it doesn't make sense for them. So they need to lend for 2-3 years, and when they lend for 2-3 years, they want a more stable and robust company to fund. While for us, we typically do short-term lending. We don't look at financials, for example. Financials are not important or not critical for us for lending from lending perspective. Uh, we if unless they have a really bad track record in terms of repayments, obviously that becomes a botheration. But if they do not have a track record and they're a very young company, it's also not a problem for us, because the way we underwrite, the way our credit algorithms are designed are very different from, let's say, a traditional financial institution. Typically, we will look at alternative data, we'll look at their cash flows, we'll look at their transactions, we'll look at their future projects, for example, and based on that, we will typically lend. uh, for the shorter term, make, for example, a young company which has never taken a loan, they will build a track record with us, and then they are eligible for, let's say, a more longer term funding when they can go to the banks. While for the short term needs, for specific cash flow needs, they can come to us. That's why every product of ours is fairly customizable or flexible to the specific SME needs. And in certain markets, we have almost like 30, 40 products because we know that there are many different needs of an SME which can be covered through those specific products. Rather than, typically you'll see 80% of the products in Thailand, for example, are just simple term loans, but that's not what actually meets their requirement. For everything you cannot have a one-stop solution, so that's where we come in, and we try to customize it. We try to be more efficient, faster. Sometimes turnaround time is also an issue. I mean, I don't know how many of you have how many SMEs you have met who have had pretty bad experience borrowing from the more traditional financial institutions, where it could take a few weeks, sometimes a couple of months. Even the larger companies sometimes come to us and say, "Hey, I need funding in the next 1 week. Can you arrange?" Because if I go to the others, it probably take me 2 months, right? So because we are fast, we are agile, we use a lot of technology at the back end. A lot of our underwriting is fairly automated. We are able to come in and fund these SMEs when the others are not able to, or not to the extent that they want.
I was thinking about lending, payments are like two sides of the same coin. So basically, payments generate the most valuable asset for SMEs in the digital age. Real-time trustworthy data, which is, I believe, the funding society looking for, right? So when we see the transaction histories of healthy growing SMEs on our platform, so their sales volumes, their cross-border cash flows, that data becomes a powerful tool, okay, where it can be used with their permission, okay, to de-risk them for the digital lenders like, Victor here, okay. So, I mean, imagine a scenario, SMEs that needs a loan to buy more inventories for their holiday seasons, or instead of presenting 2 years of tax return with the legacy, the traditional funding, vendors that they do, okay. So they can grant secure access to their, payment flows on wallet. So the lenders can see they have consistent growing sales and can offer a tailored, okay, like, Victor here said, okay, loans with confidence, okay. So this creates a virtuous, okay, cycle, okay, better payment, lending to better data, okay, say, so which leads to accessible financing, which fuels more growth and more payments. I believe there will be a unified financial ecosystem, or, use a very popular term, embedded financing, okay, here.
Embedded financing. So where do you see embedded financing fitting into the way that these SMEs are growing? It's a really good point, right? We talk a lot on some of our other shows about embedded insurance, and it always leads to some kind of embedded financing. Where do you look at this dovetailing with what you're already doing? And how do you work with local institutions to help facilitate that, if at all, right?
When we talk about embedded finance, it's more about how the data is gathered for the future use, okay? So when you control the payment flows, you understand the merchant's real-time performance, okay? Not just their, credit history. So that's a powerful data for working capital, FX, credit lines, and risk modeling. In the future, SMEs won't apply for financing separately, but it's being embedded in their payment experiences. Okay, so I think we will see more collaborations between platforms like funding societies and wallet, where payments and lendings create a complete financial journey: earn, settle, and reinvest, all in one ecosystem.
It's a great question. I was going to ask you that was going to be my follow-up to you, Vikas, is do you see opportunities for collaboration between lending, like digital platforms like yours that are doing lending, and a platform like Wallet that is focused on payments? But like he said, they're the different side of the same coin. Do you see these collaborations growing? And if so, how do you see them working?
We actually have been collaborating with payment platforms, e-commerce platforms, even plugging ourselves into the POS data, for example. and using that data to be able to underwrite or at times give even a pre-approved offer to the SMEs who have been using those platforms for a while. So based on the past transaction data, they will receive a pre-approved offer on the platform that they're using. For example, an e-commerce platform, they can see our offer, just click a button and say, okay, I am interested in this funding, right? So that makes it super easy. There was a just before COVID happened, right? We were doing almost 1,000 loans a day just on this model, and it was basically one click, same day disbursement after they received the offer, right? So it was something which we were doing very actively, and obviously pandemic changed a few things after that. But it's still something we work very closely on. In fact, a few years back, we actually acquired a payments platform called Cardup, which has presence in Singapore, Malaysia, and Hong Kong. And primarily for this reason, right? Because the payments data is so valuable for us to be able to use for underwriting, especially for SMEs who do not have the regular traditional data, financials, or credit history to be able to receive funding. So yes, I mean, hopefully, Nicholas and I can talk after this and work on some kind of a partnership. Yes.
Figure out a way to work together.
Definitely. I mean, I'm gonna visit beautiful Thailand. Actually, end of this week, man.
Oh, right. That's great. That's great. We should catch up.
You definitely should. So I want to go back to something you said earlier, Vikas, because I can't get it out of my head. And you said it kind of casually, but I don't think you meant it in a casual way. That SMEs that are not adopting AI in some way, shape, or form are just going to get left behind. Can you just dig a little bit deeper into that for me? Like, where should they be using it? How should they be using it? How does it affect their funding? Like, what did you mean by that? Dig a little bit deeper for me.
I think there are two sides of what SMEs typically look at, right? Like any other business, to be honest. One is the revenue side, other is the cost side, right? As long as you can create a good gap between them, you'll be profitable. So there could be, depending on the industry, depending on the segment, there are so many use cases coming for AI, whether it is in terms of revenue generation or more cost optimization. Especially a lot of the repetitive tasks actually can just be automated through AI, right? And it's super cheap compared to what they typically will spend on manpower or systems and so on, right? And that's when and SMEs typically have two problems, right? One is they cannot hire a lot of people, and second, at times, if it's a skilled worker requirement, they can't hire the right talent because they can't afford them, right? And that's where the smaller SMEs who are like 10, 20 people team, if they have to grow, they cannot keep hiring more people, right? So they need to use more automation, more AI to be able to reduce the cost. Similarly, if by reducing the cost, they can actually offer a better proposition to their customers, then obviously it indirectly relates to even growth for them and being able to find new customers, new markets, and probably deepen the existing relationships as well.
Got it. Do you see things like automated lending happening, right? Because you mentioned that some of the first early products that your clients use it's just kind of one click. It's short-term lending. It allows them to build a track record with you, and then they can move on to bigger, more complex products, or even just move on to the traditional banking system. But do you see agentic AI playing a role where it understands when they need funding? The CFO doesn't necessarily need to make a decision, and because the dollar amount or the cash amount is not that large, that it can then do this in an automated way.
We can if we have enough data, to be honest.
Yeah, that's what I mean. I mean, people that have already been approved, like they just have like not a standing credit line, but like you've already lent to them, you trust them, they trust you. Do you see agentic AI playing a role there?
Yeah, so typically the way we get to know is when we are integrated with, let's say, payments platform, POS platforms, or accounting firms, right? When we have an integration, then there's a seamless data movement happening, right? And then okay, these are the cycles of when they actually need these fundings, and because we are plugged into those, we can immediately trigger an offer for them based on that, right? So that's something we are working on. Uh, Currently, it's not in place. It's not that straightforward to execute also, because sometimes a lot of our collaborators also are quite busy in what they do, right? There's a core offering, for example, for wallet, the core offering is payments. They obviously want to help their clients on the funding side also, but probably 80 to 90% of their time and effort will go into it, right? But so that's where that convergence has to happen, and that's something a lot of our platforms like us are working on, but it's still some time away where we can do it on a real-time basis. On a non-real-time basis, it's already happening.
Payments and lending it's inseparable. Okay, so payment generate value data that can power SME financing. So like I mentioned, by embedding lending into our payment platform, yes, like Vikas says, our core business is payment, but we like to provide a value adding to our customers. Okay, the customer nowadays that don't want to 10 logins from 10 different services. So they want one unified platforms, one command center, especially for their business and finance. Okay, so SMEs in the unified platforms can get credit right away when they need it. Okay, so for instance, high value, high revenue sellers could ultimately qualify for a line of credit or the buy now pay later option, as settlement. This tight integration of payments and lending helps SMEs scale faster by turning the sales data into working capital. So the way I put it is that, okay, turn payment flow into behavioral data for future lending and credit lines.
Yeah, I got it. I love these conversations. It's so interesting that it's the flip side of the same coin. It just makes the one thing that Vikas says really relevant to the one thing that Nicholas says. It's just super cool for me. I want to ask you guys both the same question. I want to start with Nicholas, if you don't mind. What is the craziest idea you still think is worth pursuing, even though it feels a little bit impossible today for your business?
Well, with today's, cryptocurrency stable coins, okay, that's something I really want to do, and that's what I've been trying to do. Okay, but because, like I said, 90% of customer base are from China, so there's still a barrier between compliance regulations. So if I can do, especially when we talk about Southeast Asia, as early as our earlier conversation, right, it's a very fragmented market. So instead of solving, create another like European unions. Okay, I don't see the foreseeable future there will be a South Asia unified market, unified ruling. Okay, so but stable coins as a financial tools, access payment tools that unifies this region. Okay, and that's something I believe it's been in progress, and I'm so desperate. Okay, so one day that that could be the solution for today's such a fragmented market. Okay, and with that unified platforms, lending vendors like Waitze here can use that and to better understanding their customers. Because otherwise, the customers not only selling in Thailand but Malaysia, and those data are separated. Okay, and then it's really hard for them to do underwriting. From my understanding, I'm sure that's the case for Vikas or not.
I would say something that I think every lender's dream is to have a data bureau. We have credit bureaus in every market, but we don't have data bureaus, which means that if I'm looking at an SME who applies to me, I just ask him for permission, and I'm able to access all his data, whether it is banking data, telecom data, accounting data, at a single platform, and able to underwrite them. It's something which I have not seen across markets, but if this happens, then it becomes an amazing level playing field, and then the only proposition which will make you win is your product and service, because everyone has the same data access, right? And it becomes so much more beneficial for the end consumer, because then they can get a lot more funding from players like us who have ready access to data, all their data, just that there's no such data repository anywhere available.
So this is actually super interesting. I'll let you guys go in a second, but this is actually super interesting to me because both of you have actually talked about things that are blockchain or sort of emerging technology related, right? Because if you want to do open banking or open insurance or open data, right, you're going to need to have self-sovereign ownership of your own data as opposed to just have it floating around. And as you said, to give people access to it on demand. And then as for what Nicholas said, stablecoins, right? Obviously based on some type of cryptocurrency, emerging market technologies. And I don't think that those ideas, although they do seem a little bit crazy today, are going to seem that crazy in the future. And I think both of these ideas are actually going to come to fruition. Nicholas, the CEO of Wallet, Vikas, Jain, country head for Thailand at Funding Societies. Thank you both so much for taking the time, coming to the show, for being so flexible, and for just being awesome today. Thank you again.
Well, thank you for the conversation. It's a pleasure.